Okay, and the water turns to wine. This is what the heat map for the S&P 500 looks like. I'm going to get into some stock charts today. Lots of selling, obviously across the board, indiscriminate selling. But let's go ahead and look at what else is going on. Let's make sure that we're not just jumping the gun, thinking that this sell-off is going to be the market crash, or we got to see where'd the money go, and read the signs that the market's telling us. So let's get right into these charts. Before I do, give me a thumbs up. This is obviously my second video today because of the price action. We had a lot of action today in the market, so we want to cover this to make sure everyone's on point. When big sell-off, when big selling action comes, it comes fast. So typically you have to be ready and primed with the levels that you're looking at. So let's get right into it. Nasdaq Futures. We'll look at the futures because they'll play a role in how we open tomorrow morning. Here's what I got. I've got a level right here at this 11,724. You can see we tagged that right here, and then it held us as support right through here. So I think, that's the level, and you can see we came back down to it, undercut it just briefly, but then closed above it. So we held support, we held the near-term support, which makes sense because, again, when markets crash, they don't just go straight down. Even though it feels like they're going to go straight down, you still need to make sure that you're positioning at appropriate levels in order to mitigate your risk. Because markets can crash, and if you jump on too late to the sell side action, then they can reverse and shake you out of that short position. So I actually went home. So I was short triple Qs. I shorted triple Qs today when I saw the breakdown. Jumped on that with a full size position, rode that down mostly to the bottom, couple in and outs here and there. And then I went home with a quarter position. So I closed my entire short, and I went home with a quarter position long triple Qs. What am I looking for? I'm looking for a bounce up to this level right here on the futures. This is the range that we were in, right in here. So you can see this range, and I'm looking for a bounce right up to there. How's that look on the Qs? Well, I think that correlates with this level right in here, right around 291. And it's about 291.30, but roughly 291. So I think we get a bounce up to there. If anything, I think the futures do it. I don't know if the Qs will do it. Maybe it'll bounce overnight and then sell off, and you'll wake up to a gap down or something like that. But I don't trade futures. So I went long Qs looking to cover my short somewhere up around that, close my long position somewhere up around 291 and then get short again. Now, this was the short-term sell signal that we just got, and I said in the video, look, we have this uptrend, a sell signal will come on the break of the downtrend line. We got that at break. It was impulsive, came in the form of a gap down and a crap out, a gap and crap. So it gaps down and sells off hard, and sold off pretty hard all day except into the last little bit. So we'll see where this goes tomorrow, but we still have major support right down here. Here's your trend line. This is an hourly chart, but this goes back to, we established this trend line back in April, and it's been very systematic. The buyers step in right here. It's clean and clear. So I don't expect us to, if we sell off and come down here, the buyers are going to step in. It's almost guaranteed, but maybe we gap down. So I think we're heading back down here, but I think we head up first. I think we head up to this 291. Then we head back, then we head down to this level. Once we're here, we'll have to see what's going on. Did the buyer step in, or do we get some sort of a bear trap? Lots of bear money or bull money has been riding this trend line. And oftentimes when you're riding a trend line, if it's going to break, it's not going to give everyone an opportunity to exit their position. And this sell-off kind of gives you an example. Anybody who took this late stage momentum trade and just got greedy, basically, they woke up to a gap down and it sold off pretty quickly. So by the time you realize, and especially people that are buying and going long up in this area, they don't even know these trend lines exist. So by the time they realize that things are going badly, it's too late. They've basically been trapped. So that's just something to take note of. So the Q's obviously close to, close to support, but didn't quite get there. Found some buying, so I think we go up, then we come down. SPY. You can see here, SPY, nice impulsive selling. Let's look at the volume here just to confirm. Nice big volume. So this is how, weak volume can be faded pretty quickly. Now, SPY wasn't that, it wasn't that aggressive of a sell-off. I mean, it's, good, pretty aggressive for a single day. But, we had a lot bigger days. Well, not really. I mean, we had many big days back in the March sell-off, but that is about as big as it gets when it comes to a daily sell-off, at least straight down action. This was a little bit bigger here. That was near the bottom. So what I'm thinking is I think we bounce a little bit. We could even bounce and run up. This could just be a short-term sell-off, and then we bounce and go up to hit this 365 level. And then you start the, the bear market or whatever, the sell-off. Or it could stop right here. Again, like I said, everybody's watching this level, this green level. This green level, just to point it out, this is a monthly chart going back to 2009. Here's your bull market trend line. Reaction, reaction, reaction all through here. Then you broke and back test and a full back test. But so you can see everybody's watching this level. It's clear now that this level, I mean, all the YouTube people that I've seen recognize what they are calling, this broadening wedge, basically, which I've got marked out with this green line here and this red line down here. Nobody saw this, in 2019. I saw this. I said in every single one of my videos, I think we're going to run up and do a back test and then fail. But now everybody sees it. It's obvious. So when a line is obvious, a trend line is obvious, oftentimes they'll stop short. They'll just stop short and sell off, and that will be the top. Everybody thinks it's going to go up there, but it doesn't. Stop short. People step in early and take profit. Another thing I want to point out on the Qs, take away my trend lines, and we have a Dragonfly Doji right here. There's your Dragonfly Doji and confirmation candle right there on the daily chart. So we have a reversal candlestick, which was there yesterday. Now Doji candlesticks don't mean anything without the confirmation. And there's your confirmation right there. Nice impulsive selling. That's a sell signal as clean as it gets for the most part. So, I think we dance around maybe a little bit, come down, hit this resistance, and maybe struggle and battle a little bit on this support line right here. I think we battle a little bit, then we gap down or some sort of impulsive sell-off. That's what I think is going to happen. Here's IWM. IWM, nice, reversal candle right there. Just wiped out a good, pretty much wiped out all the gains for the last 27 days. So, 4 to 5 weeks worth of trading days were wiped out. 1 month basically wiped out in 1 day. And this is how shorting and this is how the sell side works. I get ridiculed a lot of the time because the bulls, like I said, bullish action, stocks go up 8 out of 10 days. They'll go up for 8 days, and then when things are going to crash or come down, it'll wipe out all those gains in 1 day. So be careful when you call me out for saying, I'm a perma-bear and stuff, because stocks only go up, because the sell action can wipe out lots of gains really quickly. Like this, to give you an example, if I go to the SPY, you can see this was your COVID crash basically. And if you look at the day, I mean, towards the lows there, you had wiped out about, really going back to any of these gains right in here. So roughly 1,031 days. And if I look at months, I mean, it's like 2 or 3 years worth of gains were wiped out at the lows right there. You can see, near the lows, 140 months were wiped out. So many, many years were wiped out very, very quickly. And that's how the sell side action works. If this is going to, if we're going to start a bear market, I'm not saying it's going to happen. I think it's going to happen. That's the camp I'm in. But it'll happen quickly. Probably not in the beginning, because this trend has been so strong. Usually you're not going to see just a collapse from the top because you have a lot of people that don't believe that it's the top. So you'll see this you'll see a little bit of dip buying, and then you'll see more selling, a little dip buying, a little bit of, there will be battleground areas. People won't believe it, and then it'll become obvious. And when it's obvious, that's when you get the impulsive, selling. So usually you can't wait to take a position till it's obvious. You have to, use technical analysis to your advantage to give you at least a high probability that a trade is going to work out. The dollar couldn't quite break resistance today. It tried twice, 1, 2, couldn't do it. It started to coil back up towards the close. So we'll see if this wants to break in the overnight session or what it wants to do. I think the dollar is going to break higher. And again, I think it's going to go up to 95 level right up here. Now, this will most likely come with more selling in the stock market, because you have to remember a lot of the selling or a lot of the buying in the market has come on the back of a weaker dollar. So if the dollar catches a bid and gets stronger, then you're going to see a lot of you're going to see a lot of selling in the stock market. We started to see some today. So financials obviously sold off today with tech. That's not a good sign for the market, so let's keep an eye on that. But you can see impulsive selling rejected from resistance. A follow-through day would, be pretty damaging for financials and could set in motion the next trend. All right, so Apple pretty much closed at support. When I went back and looked at it, I drew a trend line here from the March lows, and you can see on the daily chart here, we had a reaction there. Brief little breakdown, but that was kind of a false breakdown, basically a bear trap. And then it impulsively gapped up and ran higher. So clear bear trap there. So we had that reaction right there. And we came right down and closed pretty much at support. Just a little bit above, but basically at support. So this could be the short-term bottom for Apple. Maybe we get a little kickback rally, some dip buyers come in. We'll have to see. But again, support. It's at support, so it should hold. Doesn't mean it will. So if it doesn't, we see some sort of impulsive breakdown. That will be further information that we can use to our advantage. I moved my Microsoft line. Here's the March lows right here, and we got some reactions right up in here. So it's not my favorite trend line because I have only kind of a cluster right in here, which makes kind of a single data point. But we've got one at the low and then this cluster, and we closed right at it. Here's the close of Microsoft. Undercut it just slightly and bounced up and recovered it. So I'll say we're at support with this one until proven otherwise. Here's Amazon. I didn't move my trend line on Amazon at all. Broke down. Here's the daily. Undercut it, the support line, but was able to hold and bounce back up and close above support. So several of these FANGs, Apple, Microsoft, and Amazon, are at support. If they can hold here, then the market's not going to go much further down, at least in the short term. You need to see these things break down. These are your trigger, I guess, or a better sell signal is to see these FANGs break their support. If these break and you get a nice solid close below support, then the market should continue to come down. But the major players closed at support right now, so we should get a bounce here. Here's one NVIDIA, NVDA. Pretty weak action today, down almost 10%, 9 3/10. And you can see here, I've got this bearish rising wedge on NVIDIA. We broke to the upside. Anytime you're on the upside of a bearish pattern, like a bearish rising wedge, and you break to the upside, that's high risk area. That is low probability, high risk area. And oftentimes those moves are the ending move. They're faded and you then move to the downside. So this looks weak. We were way up here, ended up being, a complete breakdown. So look for, I think we're going to head down to the bottom of the wedge here around 498.50. And then, depending on obviously when we get there, and then, probably going to break to the downside on this one. And PayPal's interesting. The dip buyers stepped in and bought PayPal. You can see right here, at one point, PayPal was all the way down around 194.70. Closed the day up at 204, basically 205. So the dip buyers stepped in, and that's an example of what I think is going to happen. The dip buyers, buying the dips has worked for 12 years. You're not going to get that trend or that behavior to just end, on the first sell-off. So oftentimes when you're making a top, you're going to have several traders not believe it. The dip buyers will come back in and buy the dip. And then they'll be proven wrong if that is going to be a top, and eventually the dip buyers are taught a lesson that, buying the dip doesn't always work. But until then, they're going to continue to do it. So that's what I think is going to happen. That's why I went home long triple Qs. Here's Netflix, not that impulsive of a sell-off today, down 4.5%, or sorry, almost 5%. But, the candle's not that impulsive, but still below support and being rejected by resistance. All right, this one. I went home with a little bit of KHC. Took a position here. I've been talking about this one for a while. Really, I sold, my last KHC trade, I sold it when I owned it long, sold it right up in this area. And then I thought we'd come down to the bottom, and here we are sitting at the bottom. So 33.50 should hold. If I go to the weekly chart here, you can see if I mark it out, we'll mark this in, let's say we'll mark it in black just so everyone can see it. Right there is nice clean support. So if this fails here, then this was a false breakout. All right, and I'll just cover my position, close it out. But as of right now, we're at support. So you can see this held as resistance here, resistance, resistance, resistance right in here. Then we broke above, and we've been consolidating just above. We're back at support right here, 33.50. Should hold and move higher. If it doesn't, we close out the position and take a small loss. Name of the game is entering positions near key levels to keep your risk as low as possible. Here's Zoom. Zoom again, bearish rising wedge right here. And we had this big move to the upside on earnings. Huge earnings day. If you bought on that day, you've gotten smoked so far. So this to me looks like, we could consolidate a little bit here on this trend line, but I think we're going to come down to the bottom of the trend line right here. We'll probably fill this gap first though. 328, it's about 329, fill the gap. Maybe you bounce up to the top of the trend line. But the point is, regardless of what happens, if it comes back down and fills the gap and holds within this wedge, that's a recapture. You're back within the wedge. You were way above, now you're back within. So I'd expect that to, kind of set up a bearish trade and potentially what I'm looking for is a breakdown of this bottom trend line. If it can break the bottom trend line, then I'll be looking at that one. There's obviously only so many positions I can take and manage, so I try to find the best ones. This one just has a lot of hot air, though. You've got a lot of people that have been just buying these COVID stocks, making money hand over fist day after day, feeling like it's never going to end. And oftentimes when the manias like this happen, that they end quickly, and most people will lose money on these things. Some will make all the money, and the early adopters will make most of the money, but most people who jump on late to the game will lose money. Semiconductors, SOXX, often the leading edge of tech. You can see here uptrend here on the daily. We broke that trend back here, kind of broke through it a few times, ran up and did a back test right here, and then we've started to fail and head south. So rejection at a, back test rejection. This is where I like to short things, is right at, when you're doing a back test, that's a great area to short. Doesn't mean it works out, but it's the lowest risk area. And DocuSign, I covered this trade down here at the lows with the gap fill, took my profit and ran. And so we'll watch this, see what happens. Obviously, I'm looking for the best trades. That was a good one, so we'll probably move on. And we'll wrap up with volatility. So I pointed this out weeks ago or day. It's been a while. If I go to the daily, about a week ago, I pointed out the breakout from the bullish falling wedge right here. And I pointed out that we broke out. So I said, look, this is a breakout. This is where you can potentially take a long position. I was long this. I didn't catch the whole move. But here's that nice impulsive break higher that I was looking for. So I typically sell into this kind of stuff. I don't own it right now, so for me, this is not a trade. But this thing's up 20% today. This was the move that I was talking about. So anybody who took it, congratulations. And, this could obviously go higher, but I think that's probably the end, at least for now. Maybe we get a pullback, then we move higher. This thing won't go up all at once. Just remember, when things are really impulsive and everything feels like it's crashing or ramping higher, they don't all go up at once. They don't fall all at once. So oftentimes they'll fall right into support, undercut it just a little bit, and then recover, and you'll get a bounce. And then that bounce is your opportunity to recycle back in or to add to a position, things like that. So stocks make their, they go in waves up and down as they work the major trend. The major trend is still obviously in the Qs, and the SPY is still bullish. It's still up. That major trend hasn't been broken. That comes on a break of this trend line. But again, the trend line's not going to break. It's not going to give everyone just a clear picture that it's breaking, most likely. Most likely it'll break in a gap down. You'll wake up to a big gap. You're not going to have an opportunity to just be long and bullish. And that's what I think a lot of bulls always mistake. They say, they're long and they say ride the trend until it's over. But then the trend, and that's true. When you're down here and you're in the beginning stages of a trend, you can ride it till it's over. But when you start to see signs that you're getting negative divergences in the PPO, in the, right here in the RSI, and sometimes, then it's time to basically not ride the trend until the end. It's time to potentially start to take profit, or, at least not adding to the trend. And that's what I think happens. So, because by the time the trend's over, it traps a lot of that money. It keeps a lot of that money back. It'll trap you into that trend line. So that's all I got. I'm going to wrap it up here. Leave me a comment. I wanted to just get this video out to give everyone an idea of how the market closed, so you can kind of understand maybe what's happening tomorrow. I will be looking to, if we gap up tomorrow or ramp up tomorrow, I'll be looking to sell my long position there and recycle back into shorts at some point in time. That's kind of how I'm looking at it. I gave you the levels that I'm watching, and I appreciate it. Thank you.